Taking another look at gold here, and I'm telling you, I don't think that this thing is going to crash, and I'll show you why. Look, I think this is probably the last buying opportunity. Maybe you get some kind of little scary move down, but listen, it is going to be very quickly followed by a reaction right back up here. Let me show you exactly why. So, if you are selling gold, right in here, 1820-ish, okay? That's not the right move, all right? Not a good idea. I mean, maybe, listen, maybe it could be a good idea for maybe the next 2, 3 weeks or something until you get the continuation kind of this little down move here, right? The one from all the way going back up there. But very quickly, I mean, if you're nimble enough to get in and get out and get in, then sure, be my guest. I mean, go ahead and dump this thing and look to get back in closer to 1750, 1725, 1700-ish, right? On the gold, yeah, I could see a move down to 1700 real quick. Lasts maybe 3 days, maybe a week, maybe a week and a half, right? Where it does some kind of grind and choppity grind before it does the real rebound move. But check this out, okay? Let's go to an article, or I guess it's a tweet, by Timmy Ramos, Tamiris, Nick Tamiris, right here. Look, so this is the Fed's mouthpiece. He does the job that Hilsenrath used to do for the Wall Street Journal. Now look at this. He goes on to tell this story. So look, the Federal Reserve has staff, and they communicate to the editor for the Wall Street, the journalist in charge of Federal Reserve policy and all that, which is Nick Tamiris. So the Federal Reserve staff is calling him and giving him information, about what to report. And he's making his rounds calling, trying to figure out what to report. And eventually they will communicate to him, Tamiris, what they, the Fed, kind of want the public to understand. So keep in mind that's where this is coming from. He goes on to give this whole explanation of why the Fed is serious because of a story about Randy Quarles told when he was at the Federal Reserve working late at night because his family was back in Utah, I guess. He's a Mormon, devout Mormon. And he would always press the panic button with his knee, which was activated late at night, which was under his desk, right, when he was working there late at night, because he didn't fly back to Utah except for once a month or something, and his family didn't want to move out to D.C. because they're devout Mormons, and there isn't any kind of temple in D.C. of any kind of significance. So he was there late at night by himself working. He would hit this panic button, and then one time a new security guard was there. The new security guard came running in, okay, with his gun drawn and said, "What's the problem?" And then Randy Quarles said, No, you don't understand. I do this all the time. I'm sorry." The guy was new. And then the security guard happened to be an art critic and saw that there was a painting from Arthur Burns on the wall. And Randy Quarles explained this was a painting by Arthur Burns, former Federal Reserve chairman, who happened to be an artist. And this is one of his paintings. And the security guard goes, "Arthur Burns? Do you mean that guy that let inflation get out of control?" And that's the story, according to Tamiris here, okay? So, that's the punchline, is that, the Fed really isn't going to let inflation get out of control because everyone, to the man on the street, knows when somebody messes up. So the Federal Reserve's the big bad authority maker. They're going to come in and stop inflation. And you remember Powell's testimony when he was asked point blank, "Will you be like Volcker and break the back of inflation?" And what was Powell's response? "I really hope history will prove yes." I mean, come on. So look, that's why gold is selling here. Look at this move is nasty, right? So we got this move down. I know this one's painful. And if you're in these forsaken miners, I mean, heaven forbid, if you're, look, this thing is a joke. I mean, these guys, this stuff is just, well, I mean, listen, if you got any kind of size on here, I mean, you're not sleep well last week. I mean, now you've probably calmed down if you've gone back to your fundamental research and reassessed why you own this stuff already. But last week, I mean, down in here, this stuff, I mean, you weren't sleeping, right? You were getting yourself worried from anxiety and making yourself physically ill right here, right? I mean, this is wet the bed level. I mean, okay, no, look, right down here, like this is wet the bed level. Okay, this one right here is kind of like, what is going on? I'm not sleeping, right? Yeah, you're not sleeping. I'm not sleeping. Nobody's sleeping. If we get some kind of move down into here, I mean, this is wet the bed level, right? This is change the sheets, okay? Yeah. So look, we got that going on. Tamiris says, watch out, the Fed's going to hike and crush your stocks. And I'm saying, all right, let's go see, what did Arthur Burns actually say? You want to know what? Check this out. This is Gel Zilstra here. Gel Zilstra? Zilstra? Listen, here's what he says in his notes. He's a Dutch banker, okay? Famous. Look what he says about actual Arthur Burns. You can just read this. Look, let me conclude this lecture. After the Second World War, this is him talking. Look, okay? And then down here, Zylstra starts to quote Arthur Burns. Okay, look, the central banks are faced with a difficult task. Okay, starting here, right? Faced with a difficult task. In performing that task, they will not invariably receive support from the world of politics and politicians. In his brilliant Per Jacobson lecture of 77, Arthur Burns, okay, so now he's going to quote Arthur Burns. Arthur Burns was candid on this subject, meaning he was open and transparent about his subject after he had stopped being chairman, okay, when he was open to talk freely about it. After complaining that the government is so often busy to enlarge the flow of benefits to the population at large or to this or that group, he described why it is so difficult politically for the Federal Reserve System to keep the money supply under control. Okay, let's check this one out, all right? Got it so far? So this is the meat of it now. If the Federal Reserve then sought to create a monetary environment that fell seriously short of accommodating the upward pressures on prices. So that means if the Fed doesn't print the money, okay, and monetize the debt, if the Fed doesn't do that, meaning if the Fed is responsible and wants to rein in inflation, okay, like, I don't know, Jay Powell says they're going to do now, okay, the prices that were being released or reinforced by government action, stimulus, okay, severe difficulties could be quickly produced in the economy, i.e., stocks crash, okay. Not only that, the Federal Reserve would be frustrating the will of Congress to which it is responsible. Okay, is Jerome Powell reinstated as the Federal Reserve Chairman? Nope, he is still acting chairman. They're hanging his position in the balance, okay? Because they are going to put him in the hot seat. So if inflation gets out of control, they say, oh, it's Jay Powell's fault. He's not renominated yet. I guess no, he's nominated, but he's not confirmed. He's not the confirmed chairman of the Federal Reserve. He's just the acting chairman because they still refuse, Congress still refuses to confirm his nomination. Got it? See how the game works? Look, a Congress that was intent on provide. So look, if the Fed doesn't do the will of Congress, it gets politically difficult, and a Congress to whom they are responsible, the Fed responsible to Congress. A Congress that was intent on providing additional services to the electorate and on assuring that jobs and incomes were maintained, particularly in the short run. Okay, you see how this works? They can talk all they want to about raising rates, stopping inflation, breaking the back of inflation, that Powell is another Volcker. It's BS. It ain't gonna happen. Look at reality, understand how the thing works, okay, and get in here. Look at this. Look at this. We're at 30 bucks on the gold miners. Okay, zoom out here. Zoom out and take a look. All right? What do you think? You think that this is going to break? Look at this. You think that this is going to be the time that this thing breaks? Come on. This was the freak out break, all right? This ain't going to break. They are not going to stop inflation. They have no intention of doing so. And all these clowns, okay, who are selling up in here, all right, all these fools, good grief. Look at this. Look at these fools selling in here. Look at it. Look at them. They just think what the Fed is really going to take us to task, okay? And the Fed is really, look at them just selling here. And then they get tired and then they sell them some more, okay? And then they get tired and what? They're going to come in here and start selling them some more? Maybe. But I'm telling you what, this thing, nah, ain't going to happen. The Fed is going to print the money. Promise you that. In order for them to rein in inflation, what's going to have to happen? If Congress was serious about reining in inflation, all they're doing is putting the blame on the Fed. What is Congress going to have to do if they actually cared about inflation? Huh? They're going to have to cut entitlement and defense spending, the two biggest outlays of Treasury receipts, okay, of income tax receipts. That's what they spend the money on. It's defense and then entitlement. Entitlement being Social Security and Medicare, right? They're going to have to cut that. If they were serious, they're going to have to cut defense or entitlement, or they're going to have to run a balanced budget. Do you think Congress has any intention of doing that? Do you honestly think that Congress cares if inflation gets out of control? You got all these king dollar guys in the FinTwit universe, every other thing, talking about, oh, the Fed's going to make the dollar strong. They're going to raise rates to. Are you joking me? Like, you actually think that? That is why gold does this move down here, because there are still guys out there. I mean, purportedly serious guys who think that the monetary system rests on base money. They think base money is the bottom of the pyramid. So like M1, they think M1 is as low as it goes. That's the real money. So listen, M1, I think it's just cash, physical cash, and reserves as money, as counted as money. And then once you get into M2, I think that includes checking accounts or something. I don't know, or savings deposits. I'm not sure. But these guys think the base money stops with cash and reserves in the banking system, which are both on the liability side of the Federal Reserve. Okay, so cash being your asset and the liability of the Federal Reserve, or even a number on a screen which is called your checking account at Bank of America or Wachovia or whatever, Chase Bank, okay, or even your, Illinois State Bank, okay, any little California bank. That checking account you have there is a liability of the bank, and that liability of the bank has to be offset by an asset, which is a reserve, which is on the Federal Reserve balance sheet as a liability. So, in any case, cash and reserves of the bank, which is like bank cash, okay, kind of. That's what they call base money. And these guys who are thinking, oh, gold go down because Fed tightening, these guys think that's where the base money pyramid stops. They think on a pyramid that is the base money. These guys seriously believe that right in here, right, this bottom level here is all base money, the Fed's liabilities. And they think up here is like options and derivatives and loans and stuff. And it's like these guys are completely clueless. There's another level down here, okay? It doesn't stop at base money. You know what this is? Okay? This is gold, all right? This level is gold. Gold is the base money. And actually, if you want to do it in reality, it's more like this. It's an inverted pyramid, okay? In notional value. In here, you have the gold, and there's a tiny bit of notional value. And then built on top of the gold is the base money that the Fed creates, dollars, right? There's more of that. Then on top of that, you've got like financial instruments like credit. Right above that, you've got receivables. So if you have an inventory, if you have an accounts receivable, you can get a loan of cash from that because you're going to get the money. So if you're, a producer of goods, you can get a loan based on a receivable you have because that's an actual transaction that's already occurred. And then on top of that, you've got stuff like stocks, bonds. No. On top of that, you got like credit, debt. And on top of that, you got equity like stocks. And then on top of that, you got all kind of notional derivative stuff in the quadrillions or something. That's all the fake stuff is up here, right? So that's the notional value. But, to talk about the pyramid and what you can understand is that the base of the pyramid, in terms of importance and structure and stability, that's gold. These guys think it's M1 or M2, okay? Now, and in terms of notional value, the nominal value or the supply in the world outstanding, it's an inverted pyramid, right? So this is supply and this is strength. And these guys who are selling this gold think that this pyramid only has this top layer, and they have no understanding of this bottom layer. So that's why gold is going down. And in order for gold to continue to go down, it very well could. The only way gold goes down from here is if the Fed actually doesn't monetize the debt, if they reduce the amount of money in circulation. I have no doubt that perhaps they think they want to, right? Surely they want to reduce or keep constant the base money in circulation. Of course they want to. I suppose they're honest in that they don't want inflation. But look at this quote from Arthur Burns. Look what he's saying the reality is. The reality is it doesn't matter what they want to do, okay? Because reality is they have a Congress that is intent upon providing additional services, i.e., entitlement spending and stimulus, to the electorate on assuring that jobs and incomes were maintained, particularly in the short run. So that's the name of the game. It ain't going to happen because at some point, if they keep hiking, markets will crash hard, and then the job losses come. And the whole point is they're politically concerned about inflation being a concern. They don't actually care about inflation. They just care about getting reelected. And so because the polls are saying inflation is a concern. You think anybody is going to care if a loaf of bread costs $7 if they don't have a job? It's ridiculous. You think anybody is going to care about $8 gallon gasoline if they don't have a job? Nobody cares about what inflation is if they can't buy anything. Inflation is only a concern because people have jobs to pay for the stuff, to not pay for the stuff, to pay for the stuff that's going up in price. If you don't have a job, it doesn't matter. It truly doesn't matter. These politicians have never not had a job because they exist off the government dole. They don't understand the reality of people losing their jobs and not having money to pay their mortgage. These people are clueless, okay? They got no idea. They ain't going to hike. They ain't going to reduce the monetary supply. They are going to print to kingdom come. You do not want to sell this stuff. I mean, you don't sell here, okay? That's not where you sell. And you don't sell here, and you don't sell here, and you don't sell here. And this, you wet the bed and sell and buy it back and freak out. I mean, this is insane. I lived through this, and hey, we're up here now, okay? So, again, you don't sell here, you don't sell in here, and you don't sell down there. You just don't do it. They're going to print the money. Rest assured, it's a guarantee. They're going to print the money, and at what point the reality sets in to these king dollar guys that the Fed is going to print the money, they're not going to raise rates. When all these guys actually start figuring this out, I doubt you're going to be able to buy gold back. I mean, this thing, I assume that they'll just shut the markets, and when they open it, they'll open it, markets will shut down and just go like, dead, blank, right? It'll be like that. And then when they open back up, I don't know, maybe it'll open back up here or something, right? I hope, I guess, maybe all the way back here at all-time highs, or since 2012, was that? 2011, right? I assume we'll get something like that. So, thanks for watching. If you haven't subscribed, please do, and give it a like if you can. I appreciate it very much. Hope it helps. Bye.